Hey, what's up, guys? Sam here, and I'll be doing the free video for Friday, March 10th, 2023. So, another week is complete, and what a week! Lots of moving parts, lots of really interesting dynamic changes. We covered a lot of them, all of them, in the Gold Room session that I just did. But I'd like to kind of boil that down for you guys here on the YouTubes and just kind of give you the two most important things that I'm seeing, right? Just really boil everything down, keep it real super simple. I don't believe that this is a stock picker's market, right? Especially if things actually go in the direction that I think they're going. And some of you on the YouTube, you've been following my videos for a while now, and I've been telling you something big is coming, something very big is coming, something enormous is coming. I'm thinking 2008 level stuff. If you weren't trading back then, get your popcorn ready. And I think that we now have the trigger for it. So the yield curve was always the precursor to this. The yield curve has been screaming to us. There is systemic risk everywhere. Basically, it's been quite loudly screaming that. The only thing that was missing was a catalyst, and I believe this week we found the catalyst, and that's going to be Silicon Valley Bank and the knock-on effects that it could have, basically being a domino, first stage domino, that can start tipping other things over. So let's focus on the technicals, but just understand that is the backdrop. You can kind of go back and look at my other free videos that I've done and kind of build out the bigger picture narrative, but essentially the yield curve was a ocean of gasoline, and the only thing that was needed was a spark. And I believe this week we got the spark. So if we focus on the technicals, which is our common language, this is the SPY, obviously. And at this point, just focusing on the indicators and nothing else, which is pretty much all we should do, you have a downward sloping 50 on the weekly, which is bearish. You have a squeeze forming. You have this, which is out of phase, meaning that the red is on top of the green, which is not correct. And then you get the mid-level red arrow thrust, which is the strongest possible signal to the downside that this indicator provides, is this little red arrow right here. So when you put it all together, the structure of the chart is bearish, the squeeze formation is bearish, this is neutral, and this is extremely bearish. So you put all the pieces together and it's a pretty bearish outlook. If we then look at the daily chart here, you have the same kind of outlook here. This actually looks like a little head and shoulders now that I look at it. That's irrelevant though. So you broke below the 200. You did it on massive volume, and in doing so, you've had nothing but sell signals, and you went bearish here. So I don't actually have any support levels anywhere close. I'm sure that maybe 380, even though I don't really have a support level there, will act as some level of support, but I actually wouldn't even tell you that's support. The support level that I have is 375. So another, call it 11 points on the SPY before you get to support. Now, here's the thing. Well, let me give you a better support level actually. It's 375 to 372. Let me give you kind of instead of a level, let me give you a zone, because that's more correct. That's the 618, 375 to 372, which is the weekly 200. That's your support level for many, many reasons. In my estimation, based on these signals, it will not hold. The signals are just overwhelming that it won't hold. You might get a bounce there, but it won't hold. So then that opens up the door for the actual full target of this next move, which is 334.69. We won't talk about this target quite just yet, but maybe as the weeks progress, keep in mind that is a very real target way down there, but it's not worth talking about today. So as it sits, this is a very bearish outlook here. And again, kind of understanding the upper order of the system, it started with the yield curve at the very top that was screaming red, 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 red signals, danger, 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 alarm bells everywhere. That's the primary North Star for everything that I've brought you for the past year. Now the technicals on the chart match that signal from the yield curve, and the yield curve now has a catalyst in the form of what happened today with the banks. So put it all together, and this thing's going lower, and it might be going lower in a rather vicious and spectacular way. So that's half of it. The other thing that I would suggest that you track is going to be HYG. If you look at the bond market today, the bonds actually went up by a lot. So that means that interest rates came down by a lot, like a historical amount. The 10-year or the 30-year, the long bond was up like 3% today. I mean, that is just truly, truly statistically unlikely, right? So why is that? Well, normally, wouldn't that be good? If interest rates rapidly come down, isn't that a bullish sign? Not quite. The reason that bonds went up so much and interest rates came down so much is because of the amount of fear that Silicon Valley Bank has put into the system. So this is a mad rush for protection in the form of bonds. So that dynamic that we used to be able to say, okay, let me watch the ZB or the TNX, the 10-year rate, or the ZN, which is the 10-year future, and if rates go down, that's bullish for stocks. That dynamic, in my opinion, is broken. So at this point, bonds revert back to what they used to be, which is risk off. So bonds up, stocks down, as it has been for 40 years. So just something for you to try to understand. And then we still want to track the bonds, but we don't want to do it with the government bonds. Not anymore. Not for now. Because the government bonds are a flight to safety. What we want to use to track the bond market is going to be HYG, which is junk bonds. Now, with junk bonds here, if you remember the signals I showed you on the SPY, it had a squeeze. This was neutral on SPY, and you'll note here it's actually fully bearish because the red line is below the middle and the red is on top of the green. And then you get your patented mid-level sell signal. So when you put all the pieces together, you have a downtrend here in the form of the moving averages. This is a bearish squeeze. This is fully bearish, and this is the most bearish possible signal that this indicator could give you. So you put all the pieces together, wildly bearish signals here in HYG, and it fully confirms what we see in SPY. So what's the trade? What do? If you see HYG start to go lower, and I would have it up as an internal from here on out, if you see HYG go lower, every bounce in SPY is a sell. And frankly, every bounce in SPY is a sell, right? So if you can sell it at the daily 21, that's perfect. But it might be a sell at the hourly 21. So using those two things together here, SPY, know your levels, and HYG, we can pretty much trade anything. Because at this point, I don't believe that individual stocks matter. I think everything's going to be either red or green, kind of like what you saw today. And it really becomes much more of a big picture conversation, which we have been having here. So watch SPY going into next week. Watch HYG going into next week. I expect incredibly lower prices from here, significantly lower, like enough to like surprise even the bears in terms of how bearish this is going to be. And if we see anything change, we'll make the adjustment. But at least as of now, it's pretty much game over for bulls. So that's what I'm seeing going into next week, guys. If you don't understand anything that I just said, or if you are seeing it differently, drop us a comment down in the chat. We'd love to hear from you, even if it is just to throw a pie in our face. We like pies, so we'll take a pie. And aside from that, if you have any other questions, drop them down in the chat. Leave us a like before you go somewhere else on the YouTube. We appreciate that. It does help us out with the algorithm. And we'll catch you for the next video. Have a great weekend. Cheers. Hey traders, this is Sam with Simpler Trading. I want to thank you for watching today's video. Hopefully you found the information in it helpful. If you did, leave us a like, leave us a comment. It really does help us out with the algorithm. And if you want to see us trade live with our own real money and be part of the community, come and check us out at simplertrading.com.